So, Scott, those tech giants really carrying this market again, keeping it afloat, meant it was quite a different year for a passive investor who could have just been blindfolded and in a coma for 52 weeks and had a great return in their index fund. As a trader, though, you got to have a lot more fun. What was your takeaway from this year, Scott?
Yeah, this was a year that we experienced unlike, pretty much anything that I've ever had in my 30 plus years of trading, in terms of not just the elevated volatility that we saw pretty much throughout the year, Oliver, but the constant changing of sector, transition. 1 week, 1 day, maybe, it's the small caps. 3 days later, it could be, okay, we're rotating out of there. We're getting into some of the big caps. Tech is looking good. Obviously, everything was so sensitive based on what the Fed was doing, based on COVID, more macro things that affected this market than I can ever remember in my professional trading career. But that all adds up, Oliver, to a fantastic trading environment for traders. Again, not necessarily for the long-term investor, like you said. Someone could have been a passive investor, gotten into a fund, gone to sleep for 52 weeks. It would have been great. For a trader, though, this is an amazing, amazing environment. However, the big lesson that 2021 has taught me, and that's, again, even after doing this for 30 plus years, is, the sector rotation, the volatility that we've seen, that's not going away anytime soon. So I have learned to put stop orders in maybe a little bit tighter. I have learned to take profits off the table a little bit tighter and keep my losses a little bit tighter right now. Now, I think that's going to expand out to a normalcy. But in this environment here, if you are going to be a trader, you absolutely need to do that.
You had a couple spectacular trades on our show at the end of the year, Scott, when you were short DocuSign into earnings and then short Darden Restaurants. What I find fascinating about those two is how seemingly different they are as business models, but both were punished. Walk me through where the connection is between two such different companies. Was this just a market that was punishing stocks on an individual basis on their outlook? I mean, Darden being a reopened restaurant brand and DocuSign a clear quarantine-driven tech business.
Right. So if you look at it from that standpoint about, the reopening end of things, you would think that one should have done well, one should have been hammered like it was, right? But again, this goes to my point of how this year has really unfolded, that you almost have to look at not just sector by sector, but stock by stock as well. In the case of DocuSign here, even though that was kind of just a little bit before the latest years really sending the headlines, boy, the technicals just looked awful for that stock. They just looked awful, and that's why I was short that one going into that earnings print. For Darden, that had kind of started, their earnings last week were kind of right at the beginning of, the new sense of concern about Omicron. And I was really looking at that in addition to the technical. But Oliver, the key is here, even though those were both, fantastically winning trades, they obviously could have gone the other way. But the key is that every spread, every trade that I ever make and that I ever recommend to anybody is always to trade completely risk defined with a spread. Yes, can it limit some of your potential profits? Absolutely. But it also, on the other hand, more importantly, it completely insulates you from any sort of blow up. And especially if you are going to be a trader in this environment, I would never recommend to anyone not to trade a spread, to just always understand your risk. That is the most important thing. I am more than happy to leave some profits on the table, knowing what my maximum exposure is. And again, I think rolling into 2022 here, that sort of trading environment is going to remain at least for the first couple quarters, in my opinion.
Great point and great advice there on how to structure and approach some of these trades.